TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in St. Petersburg, Florida. 8:30 a.m. on Tuesday, 60 minutes to go until the opening bell. We have markets in positive territory right now. Quite an overnight session we've had. If you woke up this morning, you could think that we're right near flat territory. Right now, you have the S&P futures up about 28 points, just more than 1%, 24.33. NASDAQ futures up 110. That's more than 1.5% at 71.51. Dow futures up 237. 1.1%, trading at 20,498. We'll start things off. We're going to start it off with a chart of the S&P that I have up here. So here is yesterday's action. Quite a day yesterday. You opened basically right near the spike low, 2350. You trade up 200 points to 2548. Quite a run to higher price. Back to that level, quite a close on the low almost of the market day. Last night, 4 p.m., you closed things out right there at 23.99. Now, overnight, you went futures limit up pretty quickly last night by 8 o'clock, 9 o'clock last night, 2,500 limit up. You see it ticking across, but boy, oh boy, at 3:15 a.m. Eastern time, you fall out of bed from 2,500. The S&Ps trade down 120 points over the course of 3:15 till just shy of 5 a.m., 4:30, so basically an hour and 15 minutes. The S&Ps trade to negative territory, actually. From there, we go from a low of 2370 up more than 100 S&P points by 545, 2480. Right now, you're within about 1%, 2426. Jumping over to some of the other charts, there's your Dow. Pretty similar action last night. There is the close of business yesterday, Monday at about 4 p.m., 20,170. Actually made it down to a low in the Dow. What's our low print there? 20,228. And from there, we hit limit up basically in the Dow as well. That number, 21,063. It's amazing how the limit ups have changed. We were dealing with almost a 30,000 Dow when we started the collapse or the recession or the bear market, you could say. We were at about 30,000 in the Dow. That would mean that 300 points would be 1%. We're now at 20,000 in the Dow. So you get a 1,000-point move in the Dow. That's 5%. That's your futures limit up. But, man, the Dow, 21,063, and you go down to a low of just above 20,000. I mean, we were 18 points away of getting a 19,000 print in the Dow, currently trading 20,487. S&P 500, we covered 2430 right now. NASDAQ 100, pretty similar action as well. We were ticking up there at limit up for basically the entire evening. About 4:30 a.m., you fall out of bed, actually go below 7,000, currently trading 71.43. Crude oil, $29.05. Quite a collapse for crude at 4 in the morning. You're trading at $30.50. You lose more than $1 when the market collapsed as well. Gold contract this morning under 1470 at 1466. Gold at 1485. And the euro-US dollar, quite a trend there. Overnight at about 2 a.m., you go from just under 112 to we're now under 110 and dropping from there, 109.76. In terms of the news cycle, what you're seeing out there, of course, coronavirus basically shutting things down. The total number, Johns Hopkins, 183,000 cases. You're up to 7,100 deaths. Italy numbers still staggering, almost 28,000 in Italy. Of that, 2,158 deaths. That is quite a death toll in terms of percentage-wise. Hopefully that is something that they get under control. World Health Organization, they're talking about the potential for airborne, so just be cautious out there. Practice that social distancing, whether you have to touch something or whether that could be aerialized, kind of just droplets into the air for a brief time being, depending on the setting. Pretty scary stuff for sure. Stocks set to bounce slightly as Wall Street attempts to rebound from the Dow's third worst day. The final print on the Dow yesterday, 2,997 points in the red, just shy of 3,000. Pretty staggering numbers out there for sure. And there's the print right there as the worst day since 1987. That number, 2,997 in the Dow, 12.9%. You came right up against that 13% circuit breaker. Didn't quite get there. Earlier in the day, we were right next to that 13% circuit breaker as well. Did not get there as well. In terms of stocks, individual equities, we know it's going to affect a lot of small businesses, almost every business, but just the headlines persist. Nordstrom closing all stores because of the virus, withdraws 2020 outlook. You're going to see a lot of these equities just saying, basically, we're not sure of the impact because we don't model for the economy shutting down for a month or two. So Nordstrom, McDonald's says it can't estimate coronavirus impact to its business. It will consider rent deferrals for franchisees. I guess a way that they could make sure that their franchisees obviously going to be hit hard. No customers, right? You're paying rent on a business. You have 0 customers for a month or two. McDonald's for sure as they shut down. And Amazon on the flip side of that. I've ordered some stuff on Amazon. Going to hire 100,000 more workers and give raises to current staff to deal with the demand. Amazon said yesterday plans to hire 100,000 additional warehouse and delivery workers amid a surge in online orders due to the outbreak. Companies also raising pay for warehouse and delivery workers by $2 an hour in the U.S. through the end of next month. On Saturday, Amazon said some brands in the household staples category were out of stock and warned that some of its delivery promises are longer than usual. I mean, you could kind of expect that no matter how good Amazon is at their process. This is quite a unique time, and Amazon shares have held up well compared to some of the other destruction going on. I mean, Amazon, I think it was down like 4% yesterday or something when the market was down, 12%, 4 to 6%. Amazon, $17.71, so you're up about $80. This morning, we were as high as, it looks like you got it printed about $18.23. A little bit of longer time frame chart on Amazon. That's high as $21.85, sitting at about $1,700. So, man, you're off $500 or close to 25% off that high. But you could see people ordering goods online, that becoming the new norm. Definitely possible. Putting things on the S&P, it's pretty remarkable. I mean, what one analyst talking about this morning, what this recession, this pullback will be not known for is maybe how far it went, but how fast it went. And putting this even just on a 20-day chart, and hourly, which is just one of the default settings in the Thinkorswim platform, we are still able to see the all-time high in the S&P on this 20-day back chart on an hourly basis, 33.97. We came down more than 1,000 points at the open yesterday to 23.50, and we're still down basically about 1,000 points in the S&Ps. And that print was February 19th. It is March 17th. We're not even a full month from that date, 33.97. Pretty remarkable move in that time. And with that in mind, how about the VIX this morning? Quite the print overnight, 84.83. This market, we were up limit. We were down 2%. We're back right now to basically flat, if not in the green, less than 1%. But putting it even short time frame, there's your VIX as the market really accelerated to lows, 84.83. Looks like we're going to open at 81.05 on that VIX. Stay tuned, folks. I'll be coming back after the program. We'll go into what else we have happening in the markets today. Tuesday trading, S&P is up about 21, Dow up about 220. Stay tuned, folks. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's up 26, NASDAQ up 109 right now, Dow up 269. Jumping over to the stocks making moves today. Regeneron in the news. The biotech company said it aims to have a potential drug for the coronavirus, COVID-19, ready for clinical trials by early summer, earlier than previously expected. Drugs designed to both treat and prevent that virus. Jumping over to REGN, talk about some volatility recently having to do with the potential for any type of vaccine. You see the run up from 386 all the way to almost 500. We spiked to that 516 price point overnight, closed at 440 yesterday. Check out that pop, 485. So that'd be about a 10% pop at the open at 485 right now on Regeneron. Pfizer and BioNTech, BNTX, drug makers signaled an agreement to co-develop and distribute the potential vaccine aimed at preventing the COVID-19 infection. So PFE, let's see how these are trading out. Quite a drop there recently, just probably have to do with the market in some capacity, but up about $1 pre-market. And what is the other symbol? BNTX. There's your pop from about $40 up to almost $70, now pairing at about $60. Quite a pop for that news. Boeing, the airlines particularly hit hard. Boeing hit hard as well. Debt rating downgraded by S&P one notch to BBB from an A-, with the rating agency saying jet makers' cash flow for the next 2 years will be much weaker than originally expected. Separately, the company said it's in talks with the White House officials looking for some financial assistance. Boeing shares, I mean, that is just, the pain does not stop. $128 overnight, close at $129. Looks like it could be opening a bit higher with the market. But some of the airline stocks, as we jump around, there's American Airlines. Boy, that low pre-market yesterday, $11.25. Now at about $15.55. Delta Airlines, $36. Was down at almost $31 yesterday. And this doesn't even encompass, let's put this on a back, a one-year dealie. Yeah, because I wasn't getting the full slide from when this began, when it was first in, whether it was Asia, airlines canceling Asia routes, canceling some European routes. Now looks to be the potential out there, at least the potential of a domestic travel ban. Just getting hit pretty hard. Even shares of Love, which were a little bit more protected than the others because of their concentration in the U.S., but $35 down from $58 on those shares. Pretty remarkable. Other stocks, Amazon, we covered that they're hiring 100,000 workers. You have Pepsi getting an upgrade to outperform from Inline at Evercore, said PepsiCo is underappreciated as a defensive investment play compared to the rest of the consumer staples group. It'll really be interesting when all the dust settles from this and you see who was able to, and you don't want to say benefit, right? But people are stocking up on whether it's sodas, whether it's, you have an example like Kroger, right? The grocery stores. You would not know anything is going on in the market with the acceleration higher. I mean, there's volatility there, but green bars all over the place as grocery stores, as I'm sure we all know, have been stocking up for sure. Amazon in somewhat of a similar spot potentially, but they've pulled back, really entrenched, whether it's Amazon Web Services. Are they going to continue to grow if the economy shuts down and businesses are spending less money? Company like Microsoft, from 190 down to 135 yesterday. Right now it's bidding at about 138. Even company like Netflix. Netflix shares down from 393 to 298. I mean, the story was Netflix was holding up relatively well when the market, there were some big up days for Netflix when the market was going down. As of March 5th, it was up above 390. You just lost $100 as things have really decelerated in a company like Netflix. Disney shares from 153 down to 90. We're trading at about 96 right now. The fall off there, Disney, their parks all shut down in Orlando. We're in Florida. You got California shut down as well. Movie productions being pushed back. I believe the two biggest movie cinema chains, movie theater, that was the word I was looking for, chains, all of those shutting down as well. So where are you going to show the movies? You're already seeing things happen, though, in terms of Universal, I believe, releasing 3 movies originally to be in theaters right now, already going to be available on a pay-per-view basis. This is maybe going to accelerate some of the movies that we're going to spend time in theaters. Maybe Disney Plus. You're seeing Disney, actually, their Frozen 2 is going to be available on their streaming service ahead of when they were planning to do that. Frozen 2 was just at the theaters, whether it was 2-3 months ago, whatever it was. Time flies, maybe longer. But you could see an acceleration into those streaming platforms trying to make use of the fact that people are going to be home, people are going to be streaming more. Maybe this is a time to sign up for one of those services. CMCSA, quite the fall from 46 to 36, but you look at the market even. You could say it held up somewhat well until February 21st with the market, but even that pop, we were just at $44, and you're down at about 36 right now. Other stocks out there, we covered Nordstrom closing their stores. ExxonMobil, oil, taking it on the chin, said it would make significant cuts to planned spending due to the significant drop in oil prices. Their shares are now at a 17-year low. XOM, $70 down to $35, $83 just back in April. And you put this on a longer time frame chart. The pain there, you're going all the way back, like they said, to at least 2003. And, outside of this range here, what's to stop going back to 1994 at a price of about $15 on ExxonMobil and really making things interesting? Let's jump over to oil from here. Because oil, $28.78. Let me just remove whatever I've got going on over there. Maybe. That's not coming off. But nonetheless, $28. And you see this level we're at. From 2015, I believe that's 26.05. And then you have the 2008 low, which I don't think even made it that low. Yeah, $33 looks to be the low there. We're at $28, unheard of prices in oil. So, of course, ExxonMobil, even Chevron, CVX. Talk about some tough charts. $69. Chevron, not as bad when you look at ExxonMobil, as in you're just back to where you were trading at in 2010 as opposed to 2013. Continuing down the list of companies being affected, McDonald's, as we said, they're going to close their dine-in. You have Starbucks doing a similar deal. Starbucks, you can pick up your drink and go, but they've taken the tables out of the restaurant. Shake Shack announced a similar move. HD Supply, industrial distributor, imagine coming out with earnings during this. Tough situation to go in. Last quarter, probably okay for most companies. This quarter, going to be quite a different story, though. Either way, HD Supply earnings, 64 cents a share. They were looking for 55. Revenue above forecast. Company said it's going to take steps to help customers navigate the difficulties caused. Jumping over to that, HDS, and we'll have to go a little shorter time frame. There's your long-term chart for HDS, going public probably in about 2009, but getting in this morning because you're going to be trading a bit lower than that 28 close. Looks like we're not seeing much action on that. Michaels coming out with their earnings. They beat by a penny a share. Quarterly profits $1.26. Revenue in line. Same-store sales down 2.4%. Market was looking for a 2.6% drop. MIK. I mean, these are businesses, so down a bit from 266 to 250 right now. No real action on that stock, though. I mean, that's a business that is just going to dry up. Michaels. 0 people are going to be going arts and crafts fair shopping, I hope, for a period of a few weeks. Non-essentials, you're going to see that shut down potentially. We'll see how that all plays out. Stay tuned, folks. I'll be coming back after the break. We'll figure out what else we have on tap for Tuesday trading. S&P's in positive territory.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and we got to break the news. Tom Brady announces he's going to leave the New England Patriots. Pretty remarkable. That headline just breaking. I guess a post from Tom Brady quite a run he had. We'll see what happens where he ends up. Tampa, actually one of the places that they had talked about, and we'll see what the Patriots do to move on from then. One final thing I want to touch on. Right now, we get the markets S&P up about 19 points with about just over a half hour left until the opening bell. There's going to be a lot of bailouts, and there needs to be a lot of bailouts right now from our government to maintain things as they are. But one thing to consider as we go through this, man, I was reading this article, just the statistics, the amount of money the airlines have spent on buybacks over the last decade, basically just funneling their billions of dollars of profits that they had right back to shareholders, keeping nothing. That's an industry, if you don't allow businesses to fail, which we don't want to allow our airlines to fail, so we got to step in, but maybe it just changes how we think about things and what kind of regulations possible. Regulations are not good, but when you have to bail out an industry to allow them to funnel, American Airlines alone, $12 to $15 billion they used of their profits right back just basically to nothing, but taking it out of the coffers, and then bad things happen, and this is unforeseen. But in an economy, you need to be able to fail if you have to be able to manage those risks, and the airlines just taking that money out of the market and then coming to the taxpayers when it's time to pay that bill. Some decent articles, in terms of just thinking about things differently. This article in the Times, in 2015, American posted $7.6 billion in profit. They were only making $250 million in 2006. Well, they spent about $15 billion in buying back their own stock from 2014 to 2020. Staggering numbers to keep in mind as those go through, because it's going to be staggering what the government has to provide. One final check on the markets as we come into 9 a.m. Eastern time. S&P's up about 17 points right now, 24.21. You have the Dow up 136. If you woke up overnight, you would think it was a calm market, but we'll see where things shake out. I think I was going to hear the music. No? There we go. Stay tuned, folks. Larry Pesavento coming up live at 9 o'clock. I'll be back at 10 o'clock with Tom. Fast Market at 11. Basil Chapman, Steve Rhodes, Dave White, Tom O'Brien all this afternoon. Volatility in the markets, the VIX over 80. Stay tuned, folks. We'll be right back.